Tuesday, June 14th, my camera is possessed. And if it starts shaking, we're not having an earthquake. It's just going to shake. I think I disrupted everything with the live feed on YouTube by unplugging and plugging stuff in. So I hope this works. I really hope this works. And the joke I was going to start out with, I did some countertop sealing yesterday, and my white cock was all over the kitchen, spewing things all over the kitchen. The black cock that we had, it wasn't pulled out because we needed white cock. That's the kind of jokes that my girlfriend had to put up with all day yesterday. Speaking of jokes, let's just look at this. You could not time this better. Jim Cramer. Truly a hideous opening, just a total washout. That came at 5 a.m. You couldn't time it better. He timed the absolute bottom yesterday. The absolute bottom on 5-minute candles. That's legendary. I mean, you literally couldn't time it any better. It's shocking to me. The man is just unbeaten. He's truly smart, but he's just really bad at timing things. And so it literally, you can't make it up. You can't make it up. One thing that we have a fact, and we're going to go over a lot. We're going to go over the rotation yesterday, what I think this is all about. We're going to go how to follow the money on inflows from ETFs. We're going to go over Bitcoin because, there's a few people that love Bitcoin. We're going to go over how earnings is going. There's going to be earnings winners and losers. And if you want to pick a good stock, let's look at one yesterday that had a really good move. We're going to go over why NVIDIA got killed. We're going to go over Tesla and why somebody thinks Tesla's worth $800. Did you get it under 400? Because it was a crazy move yesterday. ARM Holdings, they're going to raise their prices by 300%. Isn't an opportunity? Let's take a look at the chart. Applied Digital. This one's up 20%. Okay. And then a great graphic about a portfolio, just investing overall, and a social request from Eli about, hey, how do I go about judging stocks in my own portfolio? Because he watched the weekend daily newsletter right here. It was the weekend one. It's not in education, but it's seeking off his top 10 stocks. He watched me go over the stocks and he's like, how do you go over stocks? So it's all laid out there. And we'll go over a strategy that I found, which is called Invest, Then Investigate from Soros, a legendary investor. So let's look at the Qs. Where are we? We're still under that 9-day. I mean, your 4 hour is still under that 9-day. You are up 0.5%. We got a little pop. You know why? Because producer price index, which is the cost of goods. Okay, there's two factors of inflation. Tomorrow's CPI index comes out. That's consumer price index. This is the producer price index. It came in okay. Month over month, it got cut in half. But year over year, it's still 3.3%. So that's lower than the 3.5 that was expected, but it needs to get down lower. So the market kind of ripped a little bit, didn't rip, and into it was down. I mean, you can take a look. Go and look at a 5-minute chart in the after hours. I mean, do yourself a favor, just look at it, and you can see how much the price moved. It's an assumption that tomorrow we're going to have something good happen on CPI. And so when you look at the QQQ chart in the short term, you can see, the RSI is still at 37. You're still oversold. The MACD still down, way down there. We're not down at that green line. I brought it up yesterday. The keys are clear. That green line is the trend anchored at the lows right there. And it's just a best guess. Trend lines are just best guesses. But look at the indicators. The MACD's high. The RSI is high. So it hasn't fully reset. Do I expect us to rip? No. Are we in a bull market? Absolutely. Time frame matters. If you're buying for the next 5 years, just freaking buy. If you're buying for the next 5 days, I don't know that it makes sense. So again, you've got to make up your mind. When you go into this and you go and buy something, know your time frame, because your time frame matters. Girls may say, "Oh, size doesn't matter." Size matters. Time frame matters. I'm the girl that is lying in bed, and I'm telling you, size matters. So go out, go out and make sure when you buy something, you know exactly how long you're going to hold it. That's why I like Seeking Alpha's top 10 of 2025. These top stocks of 22. If you haven't looked at this, go and look at it. Then sign up for my newsletter because I went over the first 6. I'm going to go over the rest of the 5, the 5 other ones. I'm going to go over those this weekend or this week. But these top 10 stocks, I just want to get in there. I just want to get in. I just want to slip it in. I'm not gonna, load in my full load. I'm not gonna do it all in one pump. I'm going to go slow and steady. Okay. The top stocks of 2024, they were up 125%. The top stocks of 2023, I think they were up like 140%. So again, it's a portfolio that I like. How do you get it? Well, you go over to Linktree. Okay. You have 2 options. You can sign up. We're going to go over an alpha pick, but you have 2 options. You can sign up for the bundle. Okay. This doesn't come with a free 7-day trial. The bundle gets you both premium and alpha picks. We're going to go over the quant. We're going to go over all of that stuff. That's what you get with the premium. And then alpha picks is a data-driven portfolio that has a phenomenal record. Oh, I can't show you the entire. Look, portfolio return. We can go over to performance. Oh, I'm showing the thing. I can't show it. But again, if I had the opportunity, I'd show you exactly. But you can sign up for both the premium or here's if you just want the premium. Okay, you don't want alpha picks. Even though alpha picks has that phenomenal performance, you can go and you can just get premium and you get a free 7-day trial. So sign up for the free 7-day trial by going to Linktree. Okay, the bundle's up here. It's the second link. Just the premium is the third link with a free 7-day trial, and Alpha Picks is the fourth link. So there you go. You can sign up for either one, whatever you want. But again, the top stocks, we're going to go over all of that. Now, look at what's happening. So energy outperformed. Okay, year to date, energy and healthcare are performing very well. Well, what happened last year? They were down. So does that mean we're making a shift? No. I argue this is still all about taxes. Josh Brown was on CNBC yesterday and he was screaming. For all of December, he said his entire day in December was spent with clients saying, do not give me a big tax bill in December. He said his entire firm was selling in January so that they could lock in profits, and they didn't want to sell in December. So there were no sales in December. Now you're seeing a bunch of selling. Okay. And what are you seeing selling in? Well, here's the Dow Jones. Okay. This is sorted. This is in Finviz. This is available to everybody. So all I did was go to the screener and I listed the Dow Jones Industrial Average. You can list the NASDAQ. You can list the Russell. You can list the S&P 500. Okay. You can do that. And then just sort by the change on the day. Okay, look at what's down. It's NVIDIA, it's Walmart, it's IBM. It's stuff that was up last year. And Boeing wasn't up last year, but Boeing's not going to be up last year. Disney wasn't up last year, but it's on a rebound. Then you go, and what were the big movers? It was United Health that got killed in December. It was Caterpillar. It was Amgen. You're seeing healthcare, industrials, financials. So then you take a look and you say, okay, well, let's look at what's the worst performers in the S&P. Well, let's see. The Dow's worst performance, Apple, NVIDIA, 2 leaders from last year. Yeah, I have that. But let's look at just the S&P 500 and let's look at energy, because energy was interesting yet. Valero up 4%. Baker Hughes up 3%. Schlumberger, which has earnings on Friday, up 3%. You sort by the worst one. There's one in the S&P 500. One that was negative, and that's TPL. And so let's go look at the chart of TPL. I thought this was interesting. TPL, you can look at this one, 4-hour algorithm. It just got you out a 73% gain. bounced right off the 200-day at 1140. We're going for a run again. And it was down yesterday. Maybe it's going back to its all-time high of 1539. You take a look at a weekly on this one, and it's a bit stretched. But I thought that was interesting. It's not making money. This is not an advertisement for TPL. I just found it interesting. I found that, again, how you use your tools. Go and look at Finviz, and then go use a charting program for yourself. Now, you may say, well, let's look at some of the sector stuff. This is an article from Seeking Alpha. Weekly ETF flows. 5 out of 11 sectors have record outflows. Bitcoin leads with higher inflows. So I do think this is a buy the dip market. It's a buy the dip market. You want to know what the biggest winner in the core portfolio was yesterday? It was Cleveland Cliffs, CLF. Okay, Cleveland Cliffs was up like 7% yesterday. And if you go and you look at that one, that's the biggest loser in that core portfolio. And you look at a stock chart and it looks like crap. So everything that was up is going down. Everything that was down is going to go up. As long as it's a good company with good products, good management, it's going to rebound. Do I think the Cleveland Cliffs is going to rebound? No, I think it's just hype. That was just hype. I have highlighted on the weekly how this one probably is a $7 stock. It's at $10, but it regularly pumps to $20. So at some point, I think this one takes over. Again, it's not my wheelhouse. I have it in the core portfolio because it's been a good trade for the last couple of years. It just lost everything. And so that 200 days turning negative, the 50 days still negative, everything's negative about it. Do I think it's good? No, but it was up almost 6% yesterday. So then you look at something like Abercrombie and Finch, okay? And we're going to talk about Bitcoin. But the big sell-off in Abercrombie and Finch is unwarranted according to Jefferies. And this is an alpha pick. So what does alpha picks do? They give you a complete rundown of Abercrombie and Fitch. It slid 19%. 19%. And you get that as part of your subscription to Alpha Picks. Again, why is Alpha Picks so good? Because they tell you what the reasoning is. And this one, again, it's unwarranted according to Jefferies. Right? And we can take a look at this one. This has been a great stock. Where is it sitting? Well, look at that yellow line right there that I put in. Okay, I was going to talk about this on Spaces if douchebags didn't talk for 40 freaking minutes. And one thing I hate about Spaces, just FYI, I love the guys at Wolf, and I like everybody on there. But if you go on Spaces and they ask you a question, as a host, the host Wolf or whoever asks you, hey, what's going on in your group today? And you come on there and you say, yeah, not much today. It's a down market. We really didn't do much. And then you proceed to talk for 30 minutes. That's a douchebag. To me, I'm tuning out. If you tell me there's not a lot and then you go on for 30 minutes, come on. And there's no entertainment value. It's not like you're entertaining me. Douchebags. But again, I was going to talk about this, but you guys get the benefit of just tuning in here. Here's Abercrombie and Finch. Look at how it rejected there. Okay, rejected a couple of times here in March 2024, and in March and later in March, and then it just done, and it went right through it. And then what did you get? About this 134, you got 1, 2, 3, 4, 5 times, and now 6 where it pulled back. And it's not like your RSI is, extended. Then you go to the weekly and you look at this one. Boy, look at how nicely that's setting up. And then you go to Seeking Alpha and you say, oh, you don't have to have Alpha Picks for this. This is the premium part. And you say, oh, I want to look at this. Well, let's look at the valuation. Let's look at the growth. Let's look at the profitability. It's all good. And as part of the premium, you can check the Wall Street price target. It's 188. That's 39% up. And then you can go to the virtual analyst report and it tells you all that you want to know. And so you can make the determination as to whether you want to buy this very, very easily without listening to a douche on the internet. Okay. Again, Jefferies says that it's unwarranted. So I think it's interesting. Again, I think that's interesting. And with Alpha Picks, they give you the full description. So if you didn't even have that's why I tell you the bundle is so good, and you save $159 off the bundle. But that's how you use these tools. That's how you use Seeking Alpha and Trendspider and all of those services that I have. It's the Gary bundle. Now let's look at the big stock movers of the day. Boy, we're heading into earnings season. Well, one, KB Homes surged 8%. And you might be saying, well, what's this about? Rates are super high. Nobody can get a mortgage under like 8%. Home builders have a way of buying down those mortgages. Okay, so home builders probably will benefit. And then Teladoc Health, shares jumped 10% following the announcement of a partnership with Amazon. You're in a new regime with a new president next week coming in. I think mergers and acquisitions will help. Go and invest in Amazon. Would I invest in Teladoc? No. But it's a good one. So take a look at earnings. Go over. You can take a look at Earnings Hub. We can go and look at Earnings Hub. Earnings Hub is the best place to look for earnings. We got tomorrow, JP Morgan, Goldman Sachs, BlackRock, Citigroup, Wells Fargo. Then you got Taiwan Semi. Schlumberger was up yesterday. Morgan Stanley. You got Fastenal. You got a ton of earnings coming up, and today's big mover, an earnings beat. So pick your battles. This is kind of like finding your lane, and we'll go into the building of a portfolio, the layers, and how you want to pick your stuff. Now, NVIDIA got killed yesterday on reports that customers, that data center customers not delaying orders despite report. NVIDIA says, hey, that report was false. Do you want to get into NVIDIA? It's up 2% today. NVIDIA is just one of those stocks that's sitting nicely. And do I think that it's gonna move on earnings? And when are their earnings? It's not until later in February. So you got a long time. But until that time, look at how it's using 140 as its resistance. Old resistance turns to new support. And so when I look at NVIDIA, I say that 140 is probably resistance right now, and it may be support. Look at that MACD. Look at that RSI. It's resetting, and it's got a lot of time until the earnings. And then when earnings come out, you don't think Jensen Huang was the keynote speaker at CES just to pump and dump stock. No, he was there because he believes in the long term, and they're probably killing it. And they probably have some good announcements. Do I think that this could pull back to 100? Absolutely. If we pull this back to where this bull rally really started, January of 2023, look at the value high area. Look at where it is. Most people are holding at 42. Okay? There's shelves all the way up. If we bring this in a little bit and we just bring it to the 140 and we expand this out a little bit, let's look at that. Look at the shelf. Look at the shelf. I mean, you bring it in to just June of this year and it's sitting right there. It's not like people aren't buying. So I believe in NVIDIA. I think that this one is a good bet. Do I believe that it will double? Do I believe that you will make 50% this year? No. No, if we look at NVIDIA in the quant system, it's a hold. It's not a strong buy, and it's because of the valuation. But then you go to Wall Street. There's 63 effing analysts that cover this. Okay, it's one of the most covered stocks on Wall Street. What do they think it's worth? 172. Have they brought it down? Nope. Nope. So who am I to say that 135 isn't a good price for this one? Now, I ain't, I don't have a model that builds this out like the Wall Street guys do. Now, one Wall Street guy, Tom Lee, he says Bitcoin is going to get to 250,000 this year. Now, he's been right on some stuff, but he has been super, super wrong on Bitcoin. When in 2017, he goes, I think this year it's going to get to 2,000 to 100,000. Well, it took him 8 years, 9 years to be right. So just for me, I know Bitcoin is something that I want in my portfolio. Am I pouring a ton of money into this? No. But it is at least 1% of my portfolio is where I want to get to. And I'm going to have it in the portfolio, and I'm going to have exposure to it. Now, Trump loves it. The Washington Post yesterday said that Donald Trump is expected to issue executive orders on day one related to crypto. Saxon members of Trump's transition team have been working closely with crypto leaders to finalize legislative strategy, and the Trump is expected to issue executive orders on day one. Day one. That's what pulled it out from down below. And you may say, hey, MicroStrategy, let's go and buy it. Cantor boosts this MicroStrategy price target. This guy's saying that the price target, let's see, the price target, MicroStrategy price target, $613. So let's go look. I mean, let's go look at, first we'll look at IBIT. Is this one a buy? Well, the algorithm got you out, hasn't gotten you back in, but I'd argue you want to be back in. I'd argue any dip in this you actually want to buy. Look at the MACD. Look at the RSI. We go and look at a weekly. We don't even have a 200-day, but your MACD is super high. You're still overbought on this one. Then you go look at MicroStrategy and you say, well, this one's trading at what? $342. This dude just said it's worth over $600. Should I buy it? Right now, the algorithm has you in at $348. You're trading at, let's see, $342. You had your opportunity to buy this one lower. This one might turn out to be a big one because Michael Saylor, by the way, has said they just bought a ton of new Bitcoin. And Michael Saylor is basically out there mocking people. If you don't think that this guy's just one big Ponzi scheme, I mean, it is, but you can make money from it. Then you go and look at MicroStrategy, and the average price target is 522, 59% upside. Are you going to see huge swings? Absolutely. But again, there's 9 analysts that cover this. Now, IBIT has this is a strategy of covered calls. If you have Seeking Alpha, you can go and read this strategy. It yields 15% annualized from Bitcoin options on IBIT. That's an interesting strategy. So now let's present the other side. This is the risk reversal media. And this is, I forget, Terra Nova, I think that might be. But yeah, is Bitcoin heading lower? He says that there's a shelf at 73,000. So let's go back and let's look at Bitcoin. BTC, upper per tilde USD. And then you go and look at the Coinbase one. That's how you look it up. And we're going to go look at it daily. And we've got our you know what? Let's look at a weekly, because I think there's a gap on the weekly or something. He goes all the way back to like 2018. I don't see a gap here, but he's saying 73,000 has some type of shelf there. So let's go and let's mark 73,000. Where is 73,000? Yeah, and you may say, it can't go back there. Can it? Absolutely it can. Look at those tops. I mean, he's not wrong. Look at those tops at about 73. We're going to bring this down to 73. That's 74. Let's bring it to 73. 73,652. Look at those tops. I mean, you got 1, you got 2, you got 3 right there, and then it blew through it. That could be support. I think he could be wrong, but go and watch that clip. I'll include it in the newsletter. Now, Tesla had a crazy, crazy day yesterday. We're going to look at this chart. I'll look at it a little bit, but this is the after hours chart. When the market closed, that's like a 2% move in Tesla, which is a big move for a stock. Okay, it's a big move within like 10 minutes for a stock. So let's go and look at the 4-hour. Does the 4-hour have you in? No. Will it get you in? Absolutely. Today it will get you in. Just FYI, I know the formula for the algorithm. It will get you in. If you want this algorithm, again, it makes you 202% versus buying and holding in the last 24 months makes you 250%. That's really good because you win 50% of the time. So it's a coin flip whether you're going to win on a solid stock like Tesla. Do you have a buy and hold strategy? You absolutely could. But I like having something that's back tested. And if you want something that's back tested, you can just go to Linktree right here. And Linktree, the top one, save up to 50%. You'll save more than 50% because there's a sale going on right now. And you can save 63% on the advanced. What I tell people is get this advanced if it's within your budget. And the reason I tell people that is because it comes with unlimited one-on-one training for an entire year. Take 2 courses a month. 2. That just means if you take 2 of them, It's $40 per course, okay, per session. If you get piano lessons, go and find a piano teacher that's going to teach you piano for $40 per. You can't. Okay? And with $40 per session, you get the tool for free. That means the tool's included for the entire year. And if that's not within your budget, at least get the enhanced, because the enhanced comes with one free session where you can set everything up. You can go with them and set everything up. You can even try and use it yourself for 6 months and then get a free one-on-one training session, or 2 months, whatever you want, but it comes with one. The standard is a great thing when it's not on sale. Okay, when these enhanced and advanced aren't on sale, the standard's great, but it doesn't come with the AI strategy lab. It doesn't come with the one-on-one training session. It also only has 30 simultaneous alerts. And once you start playing with alerts, that's not enough. It's not enough. But let's go and look at Tesla, because Tesla, they got a boost yesterday from Adam Jonas. Okay, he's saying the bull scenario says this is worth $800 a share. This came out at 1 o'clock yesterday. And if we just go and look at a 5-minute chart on Tesla yesterday, and I'll include the after hours right here, you're not seeing it pump at 1 o'clock. At 12:35, it started its way down. But then at the end of the day, you saw a pump. Somebody knows something. Somebody knows something. The market just opened up, and look at that candle. Okay, it's up 3.4% at 416. I have been saying buy this one under 400. You may have a chance to buy it again under 400. You very well might. But I would buy it under $400. When was the last time you had to buy it under the 50-day? It was down here at 217. Okay, 217. And now it's under the 50-day. It's still under the 50-day. Buy it. Just buy it. Now, on the weekly, it's still stretched. But this wouldn't be, for me, something that I'm looking to hold on for a long term. I'm looking for a nice bounce. And some of these notes find you that bounce. Let's talk about the top software stocks of 2025. Salesforce, HubSpot, Microsoft. Okay, those are the ones that, and ServiceNow is a fourth one that they put in there. Go and do your research. Find out about which ones you want to hold, because I do think that that it will be a good. Let's see, Microsoft seen as the top. Yeah, this one we want over here, because one of them that I'm holding in a big way, it's top 3 position, is Microsoft. Microsoft seen his pole position as agentic AI comes into focus from Morgan Stanley. So Azure reigns supreme. Other takeaways, continues to be a bright spot as it becomes the top share gainer in endpoint security, overtaking CrowdStrike. Agentic AI. So again, find the stocks that you like. Put them in your portfolio. If you go and look at Wall Street, there are 57 analysts that cover this damn stock, just like NVIDIA. It's got tons of analysts. Where do they think it's worth? $508. Have it come down? No. It's put in a nice little shelf, but it hasn't come down. You want a stock with pricing power? ARM is said to hike their prices as much as 300%. 300%. Is it a buy? Well, if we go and take a look at the valuation, it's expensive. Its momentum isn't great. The revisions aren't great. You look at the valuation, it's 101 PE. That's a bit rich for me. Then you go look at the PEG, 2.66 going forward. That's a bit rich for me. But if they're going to increase their revenue by 300%, that's going to be huge, because they're only gaining 24% year over year right now. That would be an amazing profitability boost. And look, the 3-month performance, short term, it's not doing well. You can go read the virtual analyst report on it, but let's go take a look at the chart. Because right here, it's a new stock. So we're going to look at the weekly, but the algorithm makes you 162% versus 142% buy and hold. So for a new one, it might be good to trade this one. And I argue that 174 coming into play. Because what does Wall Street think that it's worth? They actually say 145. It's trading at 142. I'd say that with that 300%, that one's going to move up. You're seeing it trade in a nice little thing. I think this one's a decent offering. Do I own it? No. Is this in my wheelhouse? No. I own, as far as chips go, I own NVIDIA. I do own this ARM. I think it's in QQQ, if I'm not mistaken. It might be. But take a look at that. I mean, that realm right there, I think that portion where it pulled back to, you could go to 99 from 140. You could go up to 174. But then you take a look at a weekly, and it's resetting. Okay, it's just resetting. The RSI is at 52. So I like this one. I like this headline that they're going to raise it by 300%. I like it. This is what killed Apple yesterday. Apple, Samsung lead smartphone shipments in 2024, but Chinese rivals gain. This is what killed it yesterday. Apple's up 0.26%. Do I think that Apple's worth more? It's a little bit tough. I mean, like NVIDIA, and there's 47 analysts that cover this. They think it's worth 247. That's not stretching it. And it's not like they've pushed it, down with the stock coming down. I think it's a decent investment. Now the quant doesn't think so. Thinks it's expensive with growth at a D, and its revisions are a C minus. There's 25 earnings per share down. There's 33 revenue down. So it hasn't been good for Apple. Still the mainstay in my portfolio. I will probably die with Apple shares. It's just there. Now, Applied Digital, stocks jump on Macquarie. This is what news, earnings stuff can do. And we're in a new cycle of basically investment. So you're going to start to see things like this pop. Now, Applied Digital, it's a strong buy from Wall Street. It's $11. It's still a 25% upside, even though today it's up 20%. Okay, Applied Digital, APLD. Let's go and take a look at the chart, because I think they had earnings yesterday, if I'm not mistaken. Let's see. Yeah, earnings were yesterday, or they're today. I don't have earnings up, but they might be today. But Applied Digital, they made that announcement. It popped up. Now you have a little red candle today. The period, it opened up at 952. Right now it's at 936. You may have an opportunity to buy this at 861. This may be a reaction is an overreaction. But when you look at it, the average Wall Street price target, and there's 8 analysts that cover this, is 1163. Is it in my wheelhouse? Not really. I mean, it's a $1.64 billion market cap. It's not my thing. But again, it might be yours. It's ranked number 7 out of 23. Again, this is how you use these tools. Twilio, which is an alpha pick, is higher than it. Cloudflare, which I think is great, and Okta, which is an alpha pick. Cloudflare is a great one. Strong buy from the quant. Wall Street says it's worth $101. It's trading at 112, but the quant says it's still a strong buy. So, and the quant knows better than most people. So that's where I put it. Now, this is a great graphic as to how to look at portfolios, and it's from Personal Finance Club, and he was selling courses, so I just stole the graphic, and I'm going to put it in the newsletter. But again, just giving a shout out to him. He's a great teacher. He has early retirement stuff. He's great. He basically does ETFs. So just understand, the different layers of investing can be confusing to new investors. The graphic may help clarify it. So you got your brokerage firm. This is Webull. This is Vanguard, Fidelity, Schwab. I have Fidelity and I have Webull. If you want Webull, I use it as my sports betting account. Join Webull today and get 75 free stocks. It is on the link tree. Okay, but I really like this. So that's your first thing, is your brokerage. Then you have your account, which is, okay, I've got an IRA. I don't have a 401k because I don't work, but I've got a brokerage account. I've also got a Roth IRA. I've also got a healthcare savings account. Those are my total accounts. Okay. Then you fund those accounts with mutual funds, ETFs, or index funds. And yes, this is how you should do it. First, you open up a brokerage. Okay. You go to a brokerage and say, hey, Fidelity, I want to open up accounts. They say, okay, what kind of accounts do you want? An IRA, a Roth IRA, or a brokerage account? You go and open up the account. Then you fund it with ETFs. That would be the absolute next step. VOO and QQQ, whatever tickles your fancy. Those are the two that I recommend. Then you pick out your individual stocks. And that's how you build your investment strategy with layering. Okay, that's exactly 100%. That's why I thought it was so good. And so I thought this graphic was fantastic. Now, when you go over to here to the chat window in what Substack, there is a paid chat here, and I think it's a paid link. I don't know what it is, but Eli asked me a question. He said, "Hey Gary, a question. I watched your Saturday video on the analysis of the first 5 stocks from Steve Kress of Seeking Alpha. It's the top 10. I'm going to go over the next 5. Question is, if you were not doing the podcast on it, realistically, how long does it take you on average to do an analysis of a stock you did?" I'm asking because I think sometimes I go overboard, and Eli does. In my sense, he goes overboard. I'm asking because I think sometimes I go overboard or I don't see something. I feel like I missed something in my assessment. I basically scan my portfolio first to see changes both on the 4-hour and weekly, as mostly look to hold stocks. For the ones that I plan only trading, I mostly look at the 4-hour. That's it. A new position, I go through Seeking Alpha in my analysis as well, though I do look at Seeking Alpha always to see if there has been any changes or articles, but also look for comfortable, i.e. that stock that is still confirming. Anyway, just trying to gauge what the second nature to me. I do have to go back to my notes to remind me about indicators sometimes. Okay, so my guidance to Eli was, personally, it's my strategy. Your strategy is your strategy. Eli, you have to sleep at night. That's why I tell people you have to sleep at night. It's the best gauge that I've gotten. There are not a lot of people who would have 50% of their portfolio in Apple when Apple has gone from 260 to 235. Okay, some people may have gotten out of Apple in that kind of realm. That's it's not a big move. It's a decent sized move, but you've had plenty of moves in Apple that have come down where people might get out of. So you are you, I am me. So what do I do when it comes to actually looking at some of these stocks? Well, I do exactly what I did in that video. I go to the 4-hour, then I go to Seeking Alpha, and then I make an assessment. I don't overanalyze things, but it also has to do with position size. So I'm not putting more than 1%. If I'm not gung-ho on something, I'm not putting more than 1% of my portfolio into it. I'm continually just adding to it. I talked about VOO and QQQ and how I'm comfortable adding those. And I do. Every now and then I just add them. Apple, I talked about how, in my retirement account and my personal account, I sold at 260. I sold a ton of shares at 260. Now, am I getting back in? Absolutely, I'm getting back in. But I'm probably not getting back in as much as I sold. And the reason is because I'm going to start moving towards safety, towards QQQ and VOO, because I'm underexposed on those. And how do you be, I'm going to build the portfolio for you for the paid newsletter subscribers. And I'm going to show you, how do you beat VOO? Well, it includes VOO. You need VOO in order to beat VOO, because just history of investors has shown you can't beat the index 100% of the time. And so I just want the index. So I liken this to Stanley Druckenmiller. And when you look at the chat window, and we can go back to the chat window to look at it. When I look at that and I say, okay, I replied to Eli a little bit. Let's see. What you saw in the podcast is the extent of it, blah, blah, blah. Steve has gone over these. And I go over, hey, Steve has already gone over them. But Druckenmiller said, by the way, do you want to hear how I invested in Argentina? And this was an interview that he did. And this is a legendary investor. It's a funny story. I wasn't at Davos, but I saw the speech in Davos by the Argentinian president. And it was about 1 p.m. I went on Perplexity and I said, give me the first most liquid ADRs in Argentina. It gave me enough of a description that I follow the old Soros rule. Invest, then investigate. I bought all of them. We did some work on them. I increased my position so far. It's been great. Okay, that's the process of what he did. So George Soros said, and this is an Investopedia article that I would include in the newsletter, invest, then investigate. So maybe my guidance to Eli would be, if you feel like you're doing too much research, just take a leap today. Find a stock today in the stock market that you think has a good, and put a little bit of money into it, and then investigate. As it starts to go up, add more money to it. And as it starts to pull back, if your thesis changes, I saw a great Zip Trader Charlie talked about Palantir. And he said, Palantir, they've been covering Palantir since it was like in the 4s and 5s in that neighborhood where I liked Palantir. I moved Palantir in October 2023 into the core portfolio. Okay. And it was at like $8. It's been one of the big winners. But personally, did I think the thesis was right? No, I thought it was overvalued. I got out at 25. Okay, I thought it was overvalued. I thought I'd get another chance to buy it under 20. I never did. It ran up to 80. It's at 67. But Zip Trader Charlie said it best last night in his video. Has anything changed about Palantir's basic thesis? That it's going to change the world through AI, through data. Has anything changed about that? No. And so Palantir hasn't changed. If you bought it at $8 with a theory that it was going to change the world with AI, and it ran up to 80, why are you selling at 67? Again, if it's because the valuation is too much, then you didn't buy it with the right thesis, or your thesis has changed. I sold it at 25. I didn't believe in it. Again, I still don't believe that it's worth $80 a share, but I have been proven wrong from the market. So you want to just add to your positions. That's it. That's it. Now, as Palantir starts to pull back and we start to see it come to the 200-day here, you can look. The weekly hasn't reset enough. I still think that there's downside. Am I buying it at that? No, but my thesis is different. So you do have to make sure that your thesis is correct. And that's all I would argue with Eli, is that I don't think there's a right way to do this. I don't think there's a wrong way to do this. I think there's a personal way to do this. And so my personal way is exactly what Druckenmiller said, is that, hey, if I find a stock and I actually like it and I have a feeling about it, I'm going to go in a little bit, and then I'm going to do a little bit more research. And as I get to more thesis, this is how I did Apple. I didn't add everything at the beginning. I added a little bit. Then I think 2004 was my initial investment. Then 2006, I added a ton more. And then in 2008, when it dipped back, I bought more. And then in 2012, when it dipped back, I bought more. So I just believed in the actual the system that Apple was running and the earnings of Apple. I didn't think I was ever going to get rid of my iPhone. And Buffett said the same thing, but he started to sell his Apple. Did his thesis change? Yeah. He's seeing something that I'm just not seeing, but he's a far better investor. Am I going to follow him? Nah. So, scans. We had a bunch of scans come in. You can see them in the newsletter. They're going to be free in the newsletter. So if you want anything that's bullish on the 4-hour, just tune into the newsletter. Go and sign up for the newsletter. Again, everything's at Linktree. And I would urge you, I don't know when this Trendspider sale, you don't see a countdown, but it will end. And I don't want you sitting there going, when it's back up to $2,600 for the advanced tier. Again, the regular price is $2,682 per year. And that includes unlimited one-on-one trading. Today, you're getting it for $900, over 63% discount. But I don't know how long that's going to go. It could go on for another week. It could be done tomorrow. They don't have a timeline on this one. It's for a limited time. Discounted inventory pricing for new customers. Act now, save big. First year of the month. So we're already at January 14th. If you have any questions, again, if you go over to Linktree, my email's up there. All of the socials are up top. Everything is on here. So if you want to support the podcast, it's all on there. Okay. I will talk to you tomorrow.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. in fear.